Good morning, investors. It is an absolute pleasure to be here with you again for another TipRanks webinar. Now, this webinar, we have actually all of our users that are going to be joining us, whether you're basic, premium, ultimate, anything in between. If you are brand new to the webinar series, this is your very first webinar. My name is Ari Gutman. I'm a customer success manager here at TipRanks. Incredibly excited to be here with you all for two reasons. Number one, guys, I absolutely love my job being able to get in front of the camera and speak to our community. It provides us with the ability to actually gain insights from all of you, whether that's feedback or commentary, or if you guys like what you are hearing. So definitely feel free to utilize the chat that we have. The second reason I absolutely love my job, guys, is because really just a part of our mission here at TipRanks of leveling the playing field for all investors. So what exactly does that mean? That means that I get to go over different tools and features that we have on TipRanks for you guys to essentially empower each and every investor that's out there, because our mission really is, guys, just leveling the playing field for investors. Now, if you are absolutely brand new to our webinars, it's your very first webinar with us, well, number one, welcome. But number two, I want to let you all know that I am not the biggest technical guy in the room. So I do have a colleague of mine in here with me. His name is Daniel Rosen. If you have any technical related problems while on this webinar, please feel free to message him. His name again is Daniel Rosen. He will take care of all of the issues related on that technical front. But without further ado, guys, let's kick right into gear when it comes to today's webinar. Now, I typically go over our economic backdrop before I even get into TipRanks itself and the tool we're going to be showcasing. And the reason being is because an informed investor is ultimately going to make the best investment decisions, whether that's the near term, say a day trader, or the long-term value investor. It is essential for all of us to, at least on that macro level, understand what exactly is going on. Now, I'm very excited for the tool of the week that we have for you guys today, because as you all are at least hopefully well aware of, it is earnings season. So this particular tool is going to give us a lot of insights into many of the companies that are going to be reporting their earnings. So where exactly are we, guys? Last week, we had a brand new CPI report come out. That's the Consumer Price Index. For anyone who's almost new to investing or not too familiar with the terminology, it's really the reading on inflation. Now, when it comes to inflation, guys, we've been seeing that inflation has, of course, been decelerating. We've been getting deflationary readings, and inflation has, in fact, been coming down. However, if you've noticed from CPI reading to CPI reading, the market hasn't actually responded as it was, say, 6 months ago, where the CPI number came down and the market rallied. Last week, prime perfect example of exactly that. We had inflation come in at 6.5%, which is incredible considering the fact that inflation was at 7.1% as of the last inflationary reading prior to last week. So if you notice, the market did not really react as it typically would, given such amazing news on inflation coming down. Now, if we question that as investors, which we certainly should, we can actually paint this picture for ourselves that the market mandates are actually changing as we speak. At one point, investors were looking at inflation, and then eyes would go to the Federal Reserve. And if inflation came down, and then the Federal Reserve would essentially come out and say, we are going to pause or pivot, now we get a nice rally. So what we saw last week was actually inflation came down, and we all kind of slowly turned our heads to the Federal Reserve. And what do you know? We had Federal Reserve presidents and even Jerome Powell himself sharing that the Federal Reserve isn't necessarily going to pause or pivot. They're actually going to slow the pace of interest rate hikes, not necessarily pause or pivot. Now, that's important language because, guys, we're going to be in 2023 here, the next 11 months together as investors, trying to understand how best to invest. So what's the environment ultimately going to look like? Well, essentially, we're going to be living in an environment of higher interest rates and higher inflation. Reason being is because it's going to take some time for inflation to actually get down to the Federal Reserve's terminal rate goal of 2 to 3% inflation. So unfortunately, we have some time to go. But fortunately, guys, TipRanks is here. We have the tools. And the advisory always, guys, for any and all investors is not to time the market. timing the market is impossible. And if you meet anybody who can perfectly time the market, invest with them, run with them, but it is impossible to time the market. So the best advice, guys, is to have time in the market to figure out which investments, given the time that we have in the market, are going to be most suitable for, number one, your actual financial position. What does your financial context look like? And number two, what are our timelines like? Do we have, as investors, 5, 10, 15, 20 years, or are we nearing retirement? We only have a year, 2 years, 3 years. Those are very different types of investors. And of course, you're going to have different levels of risk tolerance. However, it all comes down to two things here. It comes down to the knowledge that you have in front of you and the tools that you're going to be able to utilize to actually invest and find the proper investments for yourself. Now, on top of all of that, guys, this week, we have a lot of economic data that's coming out. Two of the reports that I'm really taking a look at, Producers Price Index. It's the PPI index that's going to come out. And then on top of that, retail sales. And scattered throughout the week, we have Federal Reserve presidents who are speaking. All of our ears should be on what exactly they're saying. If we can pick up on the tonality, if we can pick up on any hints they may be dropping for us, just because at the end of the month and heading into February, we are, of course, going to get the Federal Reserve coming out with the next interest rate hike decision. Again, bearing in mind that it's not expected it's going to be a pause or a pivot. So now it's a game of how much could the Federal Reserve actually hike interest rates. Incredibly important, guys, because this is really the market mandate. As inflation comes down, perhaps these are battles won, but the war here against inflation is still ongoing. Now, just the other day, guys, we had Goldman Sachs and Morgan Stanley come out with their earnings. Now, this week is also pivotal and following into the earnings season, because all the earnings that are coming out right now is essentially very indicative of what companies are going to be able to weather the real storm, at least in my opinion, the real storm that could very well be coming our way in 2023. Just the other day, we had Goldman Sachs come out and Morgan Stanley come out with their earnings. Now, Goldman Sachs missed on their earnings. They came in at 10.5 billion in terms of revenue. And I believe the expected there was 10.8 billion. So not the biggest miss, but check this out, guys. That was actually their largest miss in terms of revenue for the last decade. So that's pretty big news for Goldman Sachs. Now, a lot of that came down to operational expenses, but nonetheless, they missed on those earnings. Where on the other hand, we had Morgan Stanley come out and they actually hit expectations, surpassed expectations. So what does that tell me as an investor? Again, it loops back into what I just shared, and that this earnings season is essentially the pivotal moment for us to realize what companies could be the best to invest with in 2023, which ones are going to be able to weather the storm. Now, if you've been with me through the last few webinar series, I've been sharing with everybody that really comes down to 3 pieces of criteria. Those criteria for me as an investor, it's going to be looking into companies that have strong leadership. That's their management. So I want to have a company that's very strong in their leadership and their management, a company that has a great brand name, and also a company that is, of course, just well capitalized, has a clean balance sheet. Because if that R word recession is true and a recession does come our way, it's the companies that have great leadership, a strong brand name, and that are well capitalized that are most likely to see through to the other side of a recession. Whether it's a light recession, mild recession, or a deep recession, it's those companies that I want to be invested in. So getting right into it in terms of the tool of the week, guys, it is what I've been sharing, at least with my colleagues here at TipRanks, right now. Like, the time is right now to be preparing ourselves as investors with all the knowledge that we can possibly obtain, that we could possibly get to digest and analyze and read and study. And it is right now to get our hands on the tools that we need to be able to actually invest appropriately heading into the new year. Now, why exactly am I sharing that with my colleagues, with my friends, with family, with literally anybody that I talk to about investing? It is because this year, 2023, as much as we'd like all this uncertainty to just disappear, it's not. It hasn't disappeared. We have been ebbing and flowing, exactly as I've been sharing leading into 2023. We've been ebbing and flowing our way into this year. Now, we may have had nice green couple of trading days here, couple of past 2 weeks, However, guys, we are nowhere near the momentum that's needed to actually launch us into a bull market by any means, guys. The market mandates just aren't there. Economic conditions are not really all too different from how they were 3 months, 4 months ago. So that is why I'm sharing with everybody, guys. Now is the time. Now is the time as investors. I'm going to go ahead and share my screen now with everybody. Bear with me as I do that. We are on the TipRanks homepage here, guys, and our tool of the week that we are going to be discussing here in a bit more detail is website traffic. Now, the very first thing I want to mention before I even go any further here, guys, is what exactly is a website traffic tool? What is that going to do for me as an investor? Well, guys, every single 9th of the month, so the 9th of every single month, TipRanks gets data from a company called SEMrush. This company gives us data and essentially the website clicks, so clicks to actual site domains. What does that exactly mean? It means if I go right now to Amazon, type in Amazon.com, and I go over to Amazon's website, I'm essentially being tracked in some way, shape, or form. And this company, SEMrush, is tracking the metrics of people who are going to different domains. So why is that for me now important as an investor? Well, we found, of course, that at TipRanks, the best trends that you could possibly find, guys, any and all trends that you could possibly find as an investor are key. Now, what does website traffic essentially do for me? Website traffic will allow me to understand what sites are generating a lot of traffic. What type of site is it? Am I essentially going to that site and then proceeding to transact with that particular company? Likely if it's a site like Amazon, which we'll get into in a second, but I actually want to go over to United Airlines that recently reported earnings. Type in their ticker here. And so here we are at United Airlines, expand out to a year. We can see that they've had quite a choppy year. Just looking roughly at the stock analysis page here, taking a look at the right-hand side, we have a TipRanks smart score of a 9. Now, an 8, 9, or a 10 is a great TipRanks smart score. It means that the stock is likely to outperform the market, but that is not essentially what I'm here to look at. I'm here to go and do my own due diligence as I should as an investor. I can scroll down here. I can see that they actually had insider transactions take place. There's been a decrease in hedge fund activity. These are all things that I could look at, but they just reported earnings. So I wanted to go over with you guys what I actually was taking a look at before United Airlines actually reported those earnings, and it's in website traffic, guys. I'm going to come down to website traffic so you can get a view of the screen. Now, here's what we get when we click on website traffic. It is a beautiful chart that is going to be able to help me as an investor. Now, just scrolling down here, I want to draw your attention to where it says year-to-date comparison. Total unique visitors on all devices are up 18.7% from the same period last year. So what does this mean essentially for me now as an investor looking into United Airlines as a potential investment for myself, guys? It means that there are people out there who are gearing up to travel. They're looking to travel. And now really begins the painting of my economic picture of what do I think may happen in the coming 3 months, 6 months, 1 year. Now, this is just my thought, not financial advice here, but this is just a thought for you to then digest, guys. People typically during recessions, they don't just stop spending altogether. They just start looking for deals. People, just because there's a recession, they don't necessarily stop spending. They want to spend, they will find the means and how to spend. Typically what they do is they actually go to credit, which is actually why we've seen a lot of credit card companies doing very well. But looking at this chart now with United Air, I'm taking a look at their website traffic as I was before they actually presented their earnings. And we see a great positive trend here that more people were heading over to United Airlines. Now, the big question for myself as an investor comes down to one question, and that is, what in the world is someone doing on United Airlines when they get to unitedairlines.com? Ladies and gentlemen, they're simply looking for a flight, hopefully booking that flight and hopefully heading off to their destination. So in knowing that, the more traffic I see to United Airlines or Delta or whichever airlines that you are about to check into, the more traffic that I see on their sites, the better it is for me as an investor in knowing that people are literally going to these sites to proceed to make a transaction, spend money with United Airlines. And on the side for me as the investor, that's where the profits come in, because ultimately, guys, the more traffic that's there, the more people that are actually transacting with United Airlines, the more revenue that they're reporting on, the better that stock share price will be. And so I'm going to bring you right back now to stock analysis. Guys, I'll go back about 3 months here, but we can see, guys, what has been anticipated. Traffic goes up. Even just in the last 5 days, we are green here, and we can see that there is a nice jump. And here's our earnings report in this area over here, guys. So again, that is incredibly exciting for me as the investor to just check into every single investment before I actually go to make the investment in and of itself. So here we go, Amazon stock page. I'm going to stock analysis, as I always do, guys. The first thing I do when I get to a stock page is I go to that stock analysis page. I go to about a year out, either year to date or 1 year out. I want to get this big picture of what exactly is going on. And what do I know, guys? Amazon is down here 39%. Now, for some people, if you're brand new to investing, it might be alarming, and I totally get that. However, this is where the fun begins. This is where the magic happens, because I want to actually raise a red flag when it comes to a stock like this that's down on the year and begin my due diligence. Because if you look at the right-hand side, Amazon here, based on 8 factors on TipRanks, we're giving it the TipRanks Smart Score of a 10. Again, 8, 9, or a 10, likely to outperform the market, but that's not where I stop and then make an investment decision, guys. I do my due diligence. And I come down here, okay, there's a strong buy by analysts. Of course, we could take a look into that. There's bullish blogger sentiment. That's great news for me. Looks like an increase, hedge fund activity. I love to see it. But guys, the magic comes down to actually finding trends yourself and painting the picture by yourself as an investor, making yourself the empowered investor. So let's take a look at what's been happening in terms of Amazon's website traffic. They are due to report on the 2nd of February. Now, here we are, guys. Amazon's chart looks absolutely stunning. And I say that, guys, because I could scroll to the bottom here and pick up on some trends. So from the same quarter last year, total unique visitors, all devices up 3.4%. For the previous quarter alone, up 7.19%. The year to date here, up 2.1%. But again, as that investor who's saying, okay, is it a time to invest in Amazon? How do I go about understanding whether or not it is that time, guys? It's finding the trends. Now, what I love about Amazon, guys, is the fact that I know when I go to Amazon, or my friends or family, they go to Amazon, when literally anybody ever goes to Amazon, it is because they're interested in buying something. And if they're not going to buy it on that particular visit at that particular moment, they're probably going to come back and buy it, especially if you got Amazon Prime. There's some purchases that will be made. And so a trend like this is absolutely beautiful for me to see, that I just see a trend going up. There's more growth here, more users that are going to Amazon to shop around. And again, the end result when it comes to a chart like this is that more people go to Amazon, more people shop on Amazon, more people spend money on Amazon, Amazon reports more revenue, and we get a stock share price that essentially follows suit. That is why this type of trend is incredibly exciting for me as an investor. Again, this is just a trend that I can find when it comes to Amazon. It does not mean that this is the end-all be-all mechanism for me to go ahead and proceed to invest. Guys, I want to go to one last stock here because it is also incredibly exciting. It is Netflix. Now, Netflix is due to report earnings tomorrow. And again, we see here just on stock analysis that Netflix is red on the year. They are down 36%. That red flag shoots up for me as an investor. And here's where my fun begins, because it does have that smart score of an 8. I look past that, guys. We got some bullish blogger sentiment that's here. But I'm taking a look. Okay, smart money has decreased. It looks like, at least on TipRanks Crowd Wisdom, negative. That means that across TipRanks, there's portfolios that are actually selling out of Netflix. Now, if you are a fan of Netflix or you followed the whole saga of everything that was happening with Netflix upon their last earnings, there's some pretty exciting news that came out. First and foremost, Netflix actually literally surprised everybody except for us here at TipRanks because we saw the trend, which I'm about to point out in a hot second. But guys, Netflix reported that they had a vast amount of new users. Now, very interesting to note was a lot of those users came from outside the United States, which makes me question as an investor, is there competition out there that can literally take Netflix down? That's a question to ask yourself as an investor, but is it time to invest in Netflix? Should I invest in Netflix? How do I find these trends? Guys, let's head over to website traffic here. And here we are, another chart that we have when it comes to Netflix. And we can see from the same quarter last year, total unique visitors on all devices up 3%. From the previous quarter alone here, up 14.2%. But again, a trend that I'd certainly like to see when it comes to Netflix, that there are more people going to Netflix. Now, I know that Netflix has done some serious work on trying to crack down on password sharing. That's something that they mentioned on their last earnings call, that they were really going to crack down on password sharing, which means if I had a Netflix account and I said, I absolutely love everybody here, I'm going to share my Netflix password, that's a loss in terms of revenue for Netflix. But if they have seriously been doing work on password sharing to prevent that, and more people are coming to Netflix, here's again where that fun starts for me as an investor, because I get to paint this picture for myself on what could the earnings look like based on a trend, And if I know that there's more people going to Netflix, they've cracked down on password sharing, and so they say, then ultimately what I'm thinking as an investor is that they have been able to reach more people, perhaps even more people outside the United States. It's what happened last earnings. But either which way, there have been more people landing on Netflix. You can't get into Netflix without that password. If you're using Netflix and purchasing Netflix, a plan or package with Netflix, well, that's more revenue for Netflix. And ultimately, at the end of the day, we're going to see that a stock share price will follow suit, guys. And there we have it. We could just see that as users go down, that stock share price goes down. As users go up, that stock share price starts to go back up. I will close up shop by sharing this. TipRanks is here to do one job and one job only. It is to level the playing field for all investors. We are bridging the gap between Wall Street and Main Street, because it is time that all the information that hedge funds are able to get their hands on for thousands upon thousands of dollars, which a retail investor cannot get their hands on so easily, we put it here in packages for you guys to take advantage of, to find the trends, whether it's from website traffic, insider trading, hedge fund activity, guys. We are here to level the playing field. And I will wrap up by sharing this, guys, from how I see it moving forward into 2023. Moving into 2023, I cannot predict the future, but I myself, as an investor, I'm looking ahead and I'm painting an economic picture. And my best thinking tells me that right now is the time to prepare for the absolute worst, but plan for the best. And so with that, guys, we are sending each and every one of you who has joined us today an email for you guys to go ahead and take the next step as an investor. Be an informed investor in 2023. Level the playing field with us, guys. Join us on this mission to do exactly that. We are bridging that gap between Wall Street and Main Street. Guys, it has been an absolute pleasure to be on here with all of you. Another webinar. I will see you all next week. Thank you so much for joining me, guys, and have a great day worth of investing.